Here in this video, I will explain what is coming next for our markets. The lack of catalyst we really have from an earnings perspective. We don't have earnings that kick off again until at least January 15th or so when you start to get some of your banks. We only have a few smaller sets of data coming next week. This, along with the news that I reported earlier that the government shutdown is averted, could lead to a pretty crazy rally for Tesla stock. Now, here in this video, I will explain all of this and where Tesla stock could be going next based on this information. Now, I know a lot of people are bearish. A lot of people just got negative over the past week, and that is actually going to feed into the bull thesis for Tesla. Now, you have also fallen about 13.5% from $488 per share down to $423 per share, but I don't think this changed much. You lost 3 days worth of the upside. You're essentially back to the same level you were at on December 13th, but yet the RSI is at 60 and everyone's now bearish. So that could fuel a lot more of a rally into Tesla stock. Again, especially considering the dynamics that we now have in play. And I will explain all of this throughout this video, my expectations for Tesla into year end, into January, and then what comes thereafter. As you guys are probably already aware, I have some pretty lofty targets and expectations for Tesla next year. I think $900 per share by the end of next year is doable. I know, it sounds crazy. But with a technology as large as robotaxis on a mass scale, with Optimus development that continues, and energy going right next year, and the semi going right next year, and newer price Tesla products coming out next year, could be plural, like models, not just one model. Okay. All of these things going on, I don't think $900 per share is out of the cards by the end of 2025. Wild card is, do we get a recession? Do we get growth scares? And how many corrections overall do we see next year? Now, it's a little bit too far out to kind of try to game that out at this point, step by step. But what I will say is the government getting funded and not shutting down does pave the way for a pretty nice year-end rally for Tesla. Now, question is, does that kind of evolve into a short squeeze? Does that evolve into a gamma squeeze? Well, let me tell you, on Friday, even though it was a rough day for Tesla, you had 2.44 million shares on net that were covered on. Actually, 3 million shares were covered on in total, but you had about 500,000 shares that were also sold short. So even though Tesla was down on Friday, you had short sellers that covered on short positions. And I think that is something that will continue into year end. Really, this next week, you're going to see a lot of shorts covering on those short positions to kind of book the loss in 2024 instead of carrying that over into 2025. Now, consider that short sellers are already starting to cover on short positions, and they really have been for a little while now. Mix that with the government getting funded and a continuation of the bullish option activity, you could easily see Tesla stock close out this week in the 500s. Now, I know that sounds crazy, right? That just sounds ridiculous. But that's the current setup that I see for Tesla. Now, let's take a look at next week's option expiration for Tesla. You have some activity around the 425 call, 11,000 for volume there. 18,000 for volume at the 430 call, 18,000 for volume on Friday at the 435 call. The 440 call had 35,000 for volume. The 445 call had 23,000 for volume. The 450 call had 61,000 for volume on Friday. 480 call had 24,000 for volume on Friday. And the $500 call had 54,000 for volume on Friday. What I'm noticing here is there's a lot more, stable volume numbers on all of these options. Instead of, like we've seen the last couple of weeks, just one of these options or two or three of these options having high volume, they pretty much all had some high volume on Friday. Now, this could be an indication of a large gamma squeeze that could be coming. Instead of just hitting certain levels that kind of boost us to the next level, you could just run through levels with the right setup for next week. Now, as we will explain later throughout this video, there is some catalyst coming next week. There's some data on Tuesday, like durable goods orders. But from my understanding, Tuesday, I believe, is going to be a half day. Could be wrong in that. We'll have to double check. I don't think it really matters too much. Let's just be honest. But the setup does look really good for a gamma squeeze for this upcoming week. And again, after the government's getting funded, that is such a big potential risk off catalyst that, and a lot of people, mind you, were actually, kind of expecting the government would shut down after 2 failed votes. Well, I think this is going to catch a lot of people by surprise in a positive way. And I think this is going to help to fuel some of the upside we see in this upcoming week. Mix that with the short sellers that are already starting to cover on short positions. You could be setting yourself up for a pretty nice rebound for Tesla. Now, the option activity over the past week, you had 3,800 different trades totaling $4.77 billion with a positive order value of 80%. And you've seen a lot of very specific trades that were super bullish. I pointed one out that was a $6 million trade for the end of December. And that was the 460 call, I believe, 450 call with a break even of like 480. Okay. Yeah, super bullish. Take a look at some of these even, right? Maybe my targets don't sound too crazy when you see some of these trades. January 16th, 2026. So about a year out from now. $900 call for $434,000. A January 16th, 2026, $800 call for $502,000. A January 16th, 2026 call for $815,000. A January 16th, 2026, $800 call for $1 million. Another January 16th, 2026, $800 call for $811,000. Okay, there's a lot of people actually betting that Tesla could be, $800-900 per share by the end of 2025 or higher than that. Because if you're buying the $900 call for $3,000 by 2026, you really need Tesla above $930 to make money on that. Now, there is also other things that could have a positive impact to Tesla stock, like the January effect. Google says the January effect refers to the observed tendency for stock prices to rise more significantly in January compared to other months of the year, often attributed to investors buying back stocks they sold for tax loss harvesting in December, leading to a price increase in the new year. This phenomena is considered a seasonal anomaly in the financial market and is debated among financial experts regarding its reliability. And as you see here, historically, you kind of get that what looks like a little dip into year end, and then January tends to be pretty strong. Now, this can happen on a single stock basis, or obviously this can happen on a broader market basis. Now, mix the January effect, the psychological aspect of that, with the fact that we just had a pretty aggressive sell-off, and most market indicators are sitting at extremely low levels. Like, for an example, 67% of our markets are currently in a downtrend. Only 33% of stocks are trading above their 50-day moving average. I mean, that's not a strong market. I don't know about you guys, but 67% of stocks being in a downturn is not very strong. The Dow has been red for 3 weeks in a row. You had 10 down days for the Dow in a row. That was the worst since 1974. Okay, I don't think anyone had that in their bingo cards into year end. Well, it happened. On Thursday, CNN's Fear and Greed Index was in extreme fear territory at 22. It closed Friday at 28. Okay, so a little bit better, but still in the lower bounds of fear. Like, markets are nowhere close to as optimistic as they were previously. Should I mention the VIX that spiked to 28? It was up 75% in a single day, as Tom Lee said. Well, you've only seen that 5 other times in history, and every time that has happened, markets have been higher a month later, sometimes even just a couple of weeks later. Because when everyone gets so negative all at the same time, you have to see things continuously and progressively get worse for the markets to get worse. Okay? And if it's maybe not as bad as feared, then things can start to recover. Now, I think a lot of next week's rally is probably going to be fueled by the government shutdown crisis that was just averted after President Biden signs the stopgap funding bill. This was actually approved late last night from the House and the Senate. And this is big because over 1 million government workers would all of a sudden not get paid, especially during the holiday season. That is not good. Now, the last time we had this fear of a potential government shutdown, the deadline was October 1st, 2023. And what happened after that was the markets did bounce a bit. Now, we ultimately fell lower because there were some other issues going on at this time, but simply the government shutdown being averted likely caused this bounce during this correction period that we were in 2023. Well, take that into context to where we are today. Yes, we just did see a 4% decline. Jerome Powell had a bad day or something. He didn't communicate the right way. So markets sharply reset lower. But now you've had some Fed officials like Austin Goolsbee come out and say that we're going to hit our 2% target and the Fed's going to be cutting rates next year. Okay? And in all actuality, the Fed dot plot says we're going to get 2 rate cuts next year. But the markets kind of jumped to conclusion that inflation's going to be higher, the Fed's not going to be cutting rates. Maybe the Fed might even raise rates. And that's why the VIX abruptly shot up 75% on Wednesday. It's starting to become clear that that's probably not what Jerome Powell was trying to get at on Wednesday. Maybe it was just a miscommunication that Jerome Powell was alluding to. And now that you have funded the government for another 3 months, this likely paves the way for a strong December and likely a strong January. The fundamentals really did not change at all recently for markets, okay? From earnings expectations perspective, I mean, it's a little bit harder to justify the multiple, right? If we were expecting 4 cuts next year and now we're only expecting 2 cuts next year, okay? But I personally see that as an upside surprise throughout 2025 because I think inflation is going to come down more than expected. Now, not to mention PCE came in lower than expected as well on Friday. So that was also really good news. And that helped drive the RSP up 1.4% and another 0.15% higher in after hours. Now, another reason why I do think markets are going to move higher over the next couple of weeks is, again, the markets are very negative right now. 67% of stocks are currently in a downtrend. CNN's Fear and Greed Index is sitting at 28. Like, that's a very low level when not much has, in actuality, actually changed. Yes, Jerome Powell had a bad day. He miscommunicated a little bit. The dot plot's still pricing in 2 cuts. And it's just like the Fed is reverting back to data dependency. So the markets are going to be very focused on the data, okay? So that's maybe a little bit different, but is that a negative? Well, as long as the data doesn't come in bad, then it's not a negative, right? It could actually be positive. We could get more cuts than we're expecting in 2025. So longer term, that could be a positive. But now the government shutdown has been averted. So again, 1 million plus in government employees are not going to go without paychecks. That's really good for the velocity of money for the economy. I mean, 1 million people all of a sudden, up to 2 million people all of a sudden unemployed isn't great, okay? Or on unemployment is not great. Now, the other thing you have to consider is we don't have any earnings until at least the second week in January. But really, you don't get the banks until January 15th. You start off with Wells Fargo, Citi, JP Morgan, BNY, and the rest of that week, you really kick off the banks. So we don't have earnings until mid-January. As far as the economic calendar for next week, you really don't have anything as well. On Monday, you have Chicago Fed National Activity Index, CB Consumer Confidence, and that's it. Two-year bond auction, but that's not really important. On Tuesday, you have durable goods orders month over month. That can be important, but expectations are already really negative, right? Consensus expectation right now is negative 0.4%. Last month was 0.2% on a month over month basis. You get new home sales for November and new home sales month over month for November. Richmond Fed Manufacturing Index, manufacturing shipments, and Fed services revenues. But like none of this data is super important. Durable goods orders is, but I'm assuming you probably come in on you probably beat that consensus estimate because it's so negative already. Wednesday, obviously, markets are going to be closed. That is Christmas. On Thursday, you don't have anything at all besides initial jobless claims, expecting that's going to fall to 218,000. Again, I don't know if good data is going to be good for markets at this point or if bad data is going to be good for markets at this point. So that's something I want to watch and see how the trend, kind of evolves. On Friday, you get the good trades balance, advanced data for November, retail inventories, wholesale inventories, S&P Case-Shiller home price month over month and year over year. But again, none of this data besides Tuesday's durable goods orders is really like hard data. Okay, and I think durable goods orders is, again, going to come in a little bit better than expected. But if it comes in bad, that may be a positive for markets as well. We just really don't know at this point. So the lack of catalyst, seasonally, you tend to, have a Santa Claus rally. You just got super negative on markets, and there's a lot of room to get positive here. Crisis averted with the government shutdown. What's there not to like about the setup into year end and even into January? Now, if we do get too optimistic, if the rally gets too big, then obviously that sets you up for a little bit of disappointment sometime in Q1 2025. Like, things will disappoint at some point. I actually think we could get multiple corrections in 2025. I don't think it's going to be nearly to the same extent of 2024, just the market's going up in a straight line. But from where I sit right now, I'm not concerned about the markets into year end. Although things don't look great in some areas, the Dow does not look great. Value stocks are on their worst streak ever. Okay, which probably bounces back in January. I think a lot of that has to do with tax loss harvesting, right? The January effect could be profound in something like even the RSP, the equal weight S&P, right? I don't think you're going to see as much positivity in big tech because they're already trading at very high valuations. They're trading with a lot of, high expectations already. But like the RSP that's died in the last couple of weeks, that could see a nice bounce. The broader markets could see a really nice bounce over the next couple of weeks. Something even like a Tesla, right? Could see a very nice bounce after it's fallen almost 15% in just a couple of days. These are more or less the areas that I like. Okay. Longer term theme in 2025, I like the AI appliers, which number one is Tesla, but you could say other stocks are also there as well, like Elastic NV or even data center names like Applied Digital, right? Those are some of the names that I like for next year. Healthcare, honestly, not a bad area because it's just beaten down. Nobody likes healthcare right now. And if there is an upwards surprise next year to expectations, it might be in something like healthcare. It might be in value. Okay, that's where I want to position, not in your big tech names. So if you have a lot of big tech exposure, and you don't necessarily want to be super exposed throughout all of 2025. If you do see a rally there, I think it'd be a great time to take a little bit off the top and to rebalance portfolios a little bit. You probably don't want to get out of it entirely, but a nice little rebalance, probably not a terrible idea. With all of this said, ladies and gentlemen, I find it plausible that, again, Tesla could be a mid $500 stock by midway through January. That's just my opinion. Now, obviously, I could be wrong. I'm not a financial advisor. I wouldn't bet the farm on this. I wouldn't bet your life savings on this call, okay? But I do think Tesla presents a very attractive risk-reward opportunity, especially after the fall that we have seen. Your big levels to the downside are going to be roughly where we are now at about 420. 414, I think, psychologically is important because that was our previous all-time high, and we just broke that. And then you're looking at $400 as a round number. You also have your 20-day moving average at 393. So sure, could we fall if markets just, for whatever reason, decide to go down? Of course. But I think there's a lot more working for us positively in a good way than not. And I think that's going to be the case for all of 2025. So we'll see. Let me know what you guys think down below in the comment section. That is it. Have a great rest of your day. Thank you for supporting again, and I will see you in the next one.